Welcome, everyone, to the Rob Booker FX Street, whatever you want to call it, webinar. It's Wednesday, May 6, 2009, and you're joining me at a perfect time. I'm glad we didn't do this webinar 2 days ago because it has not been a good week of trading for me. It has not been a good week. Bad week, bad trading. Bad. And is that because I was undisciplined or money management or whatever? Here's the reason. It just is a trending market, and I'm a counter-trend trader. All right. I'm going to send a trade idea out right now to people who subscribe to my service, and you may be watching this as I send it, which is perfectly fine. We're going to go back to the charts now. I am short pound yen again. Holy crap. For those of you that have joined me for the ride this week, I am short the pound yen again. It has caused me significant pain over the course of this week. It has not been a good week for me, and I'm not done trading yet. I'm definitely not done trading. Yeah, Michael, you can certainly heckle me all you want. I'm short pound yen for a variety of reasons, and I'm not done with the currency pair yet. This is the 1 minute pound yen chart. We're 2 minutes into the webinar, and I'm already feeling a little bit crazy, so get ready. There's a 1 minute red steep line trade. That's a red trend line on the 1 minute chart. The 1 minute chart is a short-term chart. The 1 minute chart is a little bit crazy. For those of you that don't like the 1 minute chart, you're welcome to do some other chart, like the 1.5 minute chart, or the 30-second chart, or the 2 minute chart, the 3 minute chart, the 5 minute chart, or whatever else it is that you want to work with. It's a trend line, and trend lines work across the board, across the spectrum. Doesn't matter if you're looking at 1 minute, 5 minute, 10 minute, 30 minute, 60 minute, 100 minute, 150, or any other time frame. Trend lines are support, resistance is resistance. It doesn't really matter. I am targeting on this trade initially. I'm trying to get down to this blue entry line, which is another trend line. This is the 15-minute chart now. And I've drawn another trend line on that 50-minute chart. I want to get down to that trend line on the 15-minute chart. I want to move my stop to break even near or even a little bit below or at that blue entry line. I call the blue trend line an entry line. It's usually the line at which I enter a trade. That means it's usually the level at which, if it's broken and closed below, that's where I usually get into the trade. If I haven't stated that clearly enough, that's usually the first trend line that I've drawn. When I get a little bit excited about taking a trade, which, as you know, I get a little bit excited very easily, I take a trade based on a red steep line. That's why there's another trend line on my charts here. If you look at the support and resistance DVD set that we did, that are available at fxstreet.com for the low price of I don't know what it sells for, then you can get an overview of those lines, but we'll look at them a little bit more today. This is the focus for me. I am determined to trade the pound yen short. Why? Because I am determined to trade the pound yen short. I'm a counter trend trader, and it's been trending up. And I want to be part of something as it goes down. I'm a counter trend trader. It's in my blood. That's what I want to do. That's what it's all about. When it falls to about 148.20 or 148 even, I want to move my stop to break even on this trade, and I want to go lower. Where do I want to go to? Where do I want it to end up? Where do I want to be in the end? I want to be at this previous level of support down here at 145.60 or so. Yeah, it is sweet that it's going down, but as things have gone this week, I have entered this trade now, I think it's 3 times, and I've lost 100, who knows what the crap I've lost, a bunch. It has not been a good week of trading for me, as I have fought the trend, which I have been known to do. There are those people out there in the webinar today who have joined me for a live seminar in the past. And you know that it's near a full moon, so you know why I'm feeling this way. You know actually that when taking these trades, I may actually take more than one trade. If we get down to 148.20, I may even actually enter another trade. If we get down to 147.90, 100 pips away, or 147.80, 100 pips away from my original entry, I may be perfectly willing to take another trade on top of the trade that I already took. The problem has been this week I can't even get down to those levels. I can't even get down to the move to break even levels on most of these trades. And it's a frustrating week. So what do you do in a week where things really aren't working for you? Well, number one, you don't leverage your entire account to get it all back. In fact, I think you keep your trade size the same, and I think in some cases you even become a little bit more conservative about your profit target, and you don't get so whacked out about striving for a massive profit target that's a really long ways away. You kind of rope it all in, circle the wagons, get a hold of yourself, and if you can't get a hold of yourself, then you give up on the thing. You give up on the business for the week. If you can't get a hold of yourself emotionally when that stuff happens, you then just put it away for the week and you don't trade. I do have a deserted island, Boyke. That's actually not a problem. It's not a big deal to walk away from it. Michael Kane, David, others that are there with me, you know that already. All right. So questions or comments that come up from this pound yen trade? Anything that you're thinking of? We're down to 148.40. That's good. Let me see your questions, comments, jokes, or whatever, or heckling. There are shoes are not made for walking. Yeah, whatever. Okay, so this all looks good. So you guys all figured it out. Where did I put my stop loss? Here's where I put my stop loss. I put my stop loss above the previous high. Why did I put it above my previous high? Because it's kind of hard for a currency pair not only to break above one previous high, but two previous highs. Here's previous high number one. It's from this morning. Pissed me off at 149.30. From just a little while ago. And then there's another previous high at 149.90 or so. So putting it at 150 even is a completely reasonable, which is the French word for it makes sense to do that, level. We're down now to 148.32. We've been down as far as 148.27. And God bless America, please. I hope is not a trading strategy unless you're Barack Obama. And today I'm the Barack Obama of traders. I want this to work out. And I'm actually legitimately hoping that it does. Yeah, the downtrend is really strong. Kurt, I don't see any downtrend. The super short-term downtrend is really strong, but the overall trend lately has been up, which is why I'm short, because I'm a counter-trend trader, and so if things have gone up, then I'm going short. James says, just took 50 pips short on a 1-minute, 5-minute, 2 trendy in the last hour on the euro dollar. Re-entered again on a 5-minute break. That's absolutely brilliant. And why don't we right now, while we don't look at this, why don't we look at the euro dollar? Euro dollar is starting to fall. I already have something set up. I brought this for you. I built this for you. I got this ready just for you. Yeah, you know who you are. This is for you. I'm going to look at the euro dollar 45-minute chart. When's the last time you planned to trade on the 45-minute chart? You never have. Why haven't you? I don't know. I think it's a completely reasonable chart. At what price did I enter? I don't know, because I haven't entered. Are you talking about the pound yen, or are you talking about the New Zealand dollar Thai baht? I don't know what you're talking about. Here is the euro dollar 45-minute chart. Why is it the 45-minute chart? Because it's easier for me to show this trend line on the 45-minute chart. Can I ask James or Kurt or Michael Kane, can you see this chart okay? The euro dollar 45-minute chart. Are you able to see it? Okay, brilliant. Sploss says there's no 45-minute chart in MetaTrader 4. Well, fine. It doesn't really matter. Use the 30-minute chart. It's not that big of a deal. Time frame charts don't really matter. I'm only showing this 45-minute chart because it shows the trend line a little bit better. In fact, I'm now going to change this 45-minute chart to a 51-minute chart. It doesn't matter. The actual length of time is irrelevant. We're just looking at the trend line. We want to get a good view of it on our charts. This is the euro dollar 51-minute chart. Yep, you heard it here first, the 51-minute chart, area 51. Let's talk about this for a minute. If it closes below this blue entry line, that's on the 51-minute chart, I'd be more than happy, James D. and others, I'd be more than happy to sell this currency pair. Wouldn't bother me. I'd be happy with it, be happy about it, welcome this into my home. Where would I go for it? Let's look at the 240-minute chart and look at a longer-term trend line. This longer-term trend line on the 4-hour chart, I know it says 51-minute chart at the top. This is actually a 4-hour chart. It has a green baseline trend line right here, stretching across the bottoms that the currency pair made on the 22nd of April, and then again on the 28th of April, stretching up forwards into the future. Let's go back to the 51-minute chart. And here you go. So if we close below that 51-minute chart blue entry line, I don't care what time frame you draw this level on. Go ahead and use the 30-minute chart or the 60-minute chart on your MetaTrader 4 chart. But I'd like to be short this pair. I've been short all my life, actually. But I'd like to be short this pair if we actually... Okay, here we go. This is the pound yen 1-minute chart. You should be able to see it on my screen right now. Let me know if you are able to see it. There you go. We took a short trade at about 148.80 or 148.75 or so. It did make it down to 148.25. My move to break even number is actually 148.20. And it did not get down to that level. It got close to that level, but it didn't get all the way down to that level. The issue now is, can we get all the way down on the 60-minute chart? And I've got to redo all my charts now because I lost where I was. I want to get down to 145.55 or 145.60 or so, which is the previous low, previous area of support / resistance. My computer's crashing probably because it doesn't want you to follow any of these trades. I'm certainly not suggesting that you take any of these trades. I'm just telling you what I'm doing. Let's go to the 1-minute chart again, just to get a better view of what we were looking at just a moment ago. So I was short pound yen. Am short pound yen. It's moving against us now. Stop loss was above 150 or just at 150, which was just above the previous highs from this morning and a few days ago as well. And somebody mentions a profit target, a better profit target even might be 143.70, and that's completely reasonable if that's exactly what you do. When I switched over to the euro dollar, that's when we started to have problems, was when I switched over on the euro dollar to the 51-minute chart. And, you know, that's what happens when you're using some funky charts. Here's the euro dollar 51-minute chart again, and it looks like the currency pair is trying to close below our trend line that we have here. I drew this last night, and it almost closed below this level this morning, but it didn't quite get there and wasn't able to do it. It looks like it's trying to do it right now. Would today be a good day for the currency pairs all to correct? Yes, and let me give you a reason why that is. The ADP jobs report is out. It looked like it was better than expected. It hints towards maybe an NFP report on Friday that is not as bad as some of the stuff that we've been looking at recently, right? That's a possibility. But guess what's going to happen before the non-farm payroll report, folks? Do you think everybody wants to sit in front of an oncoming train? Fine, they're perfectly willing to bet that the non-farm payroll report is going to be better than expected. But you know what everybody's been doing? Everybody's been pricing that in ahead of time. Do you think they want to still be in those trades when it comes out? No. So what's happening right now? This morning, in my opinion, today what's happening after that ADP jobs report came out, in my opinion, people are starting to back out of some of these trades and some of these bets that the U.S. economy is doing fine, and they're starting to back out in advance of that non-farm payroll report. That really hints at maybe more of this type of move tomorrow than it does today, because with 1 day left to NFP, that's when people would start to panic or start to become reluctant to stay in those trades a little bit more than they do now. So people do bail out, and oftentimes you see, especially in the past year and a half, last 18 months, especially in the last 18 months, you've seen a lot of pricing in of economic reports ahead of the economic report. And then after the economic report, or even before the economic report, right before that time, everybody kind of bails out and sort of takes the money and runs. So it's like they traded the NFP before the NFP came out, so that when it comes out, that's why things can be so messed up when it does come out, and so difficult to figure out when it actually does happen, because we've already priced it in. The other big phenomenon in the past 18 months is that dollar negative news has been dollar positive. So bad news on the economic front worldwide has actually strengthened the dollar. and good news about the dollar, good news, excuse me, about the American economy and about the worldwide economy, that has lately changed the tune and strengthened the euro and actually weakened the pound yen and done exactly what you would think would be the opposite, right? Good jobs reports or good economies, in particular in America, that would be good for the dollar, right? Well, none of that stuff really applies anymore. That all applied maybe 4 years ago, but that type of cut and dry mentality about a good economic report means this for the dollar. And guess what's going to happen? I think that what's going to happen next is that whole plan could change again. Good economic news for the dollar could actually lead again for positive dollar strength in some cases. We are really actually in the midst of a year where the markets have ranged back and forth following a huge trending market for the last year or so. And I'm not sure we're quite out of the thick of that. I wouldn't be surprised to see the pound yen fall back down. I wouldn't be surprised to see the euro correct back down, and so forth ad infinitum. Let's look at the dollar Canadian. I've been looking at this dollar Canadian, and I prepared this just for you. Just for you, I prepared this, not for anybody else. I've been looking at the dollar Canadian. The 30-minute chart looks a little bit better than the 15-minute chart, so I'm going to change this to the 30-minute chart. I've been buying dollar Canadian for almost a week now. Almost a week now I've been buying it. Are you able to see my dollar Canadian 30-minute chart? Yes, excellent. Harley, thank you very much. I very much appreciate. Look at the trend line that we've got drawn here. It broke and closed above that trend line and has gone back down to retest this trend line. I am nearly ready to buy this currency pair again. Put a stop loss. I'm going to move my notes about the chart up here. I'm ready to put my stop loss down below 1674. Enter the trade on a bullish candle that closes right here or nearby, and target this green baseline and or previous high at 1900. That would be a perfectly reasonable place to target. What's happening on the 60-minute chart? Oh, the 100-minute chart. That's what we were going to go to. On the 100-minute chart, we've got a trend line drawn across the top from the 22nd of April and the top from the 28th of April. Does that sound familiar for what we were looking at a little while back on the euro? Sounds familiar to me. And that's kind of the target. You could move to break even and try for more at that level, but that's not really what I'm in the mood to do. I'm kind of in the mood, if we can get in on this trade with a reasonably tight stop loss because it's retested the trend line, then I want to sort of just get out and bank some money at the 1900 level. I do have levels that I wouldn't mind targeting. I wouldn't mind targeting closer to 1.2000, which is a great round number, $1.20. So I've been buying the dollar Canadian this week. I'm long the dollar Canadian, and I have been for a while. I got in first at 1860 or so, somewhere around there, and still long now, and have multiple positions open and would not mind adding to it pretty soon. I'm sure that there's those of you that know me already that have been trading this together with me that are also long this pair. It's probably not news to you guys. It's in a downtrend, and gosh, once again, I'm a counter trend trader that has traded in a downtrend upwards or / the wrong way. Let's color a trend line pink, and let's give you another trend line right here. That's an alternative entry on this currency pair. You could draw a trend line right here and wait for that trend line to be broken. That would alternatively be another selection. Let's look back at our pound-yen trade. We're back down near the lows. That is significantly good news, and I'm very happy to see that. Like I said, hope is not a trading strategy unless you're Barack Obama. And, I'm the Barack Obama of traders this week. Since when am I a counter-trend trader guy? Since, like, 1998? Since forever? Since always. I've certainly traded trend trading strategies, and I have them. I've even taught them in seminars. But I'm a counter-trend trader, Blakey. So always. I love this move down. I love this. If it breaks below 148.25, I would not be opposed to adding another position at that level and then moving the stop to 148.80 on the entire trade if it gets to 148 even. Comments, questions, or jokes about this trade, or any heckling that Michael Kane or anybody else wants to offer? Welcome to all those of you that are joining us. We have a good crowd today. It's nice to have you all here. David, Rocher, I hope that the webinar software is working better for you now. We're down at 120. I'm going to watch this for a second. I hope this doesn't bother you, everybody, but I'm going to watch this for a second. We're breaking down below those lows, and I'm watching it right now. That's another theoretical position that could be entered there, and stop loss to begin with at 150, but if it gets down to 148 even, we could have a stop loss at 148.80. Let's look back at the euro. Did the euro break below our trend line? Not quite yet. Hasn't quite gotten there. Good questions. I hate siding with the retail traders, and retail traders are very U.S. dollar bullish right now. Kurt, I wouldn't mind looking at some of where you see your sentiment indicators. Show us your sentiment indicators. We'd love to see that right now. Why don't you trail your stop loss since you're possibly at the beginning of a new trend in the reverse direction? I just never have had a very much luck or very much success with trailing stop losses. Point Tom. In my next life, says Boyke, I could be a trend trader. Ain't that the truth? Ain't that the truth? I could certainly do that. Let's look back again at the U.S. dollar, Canadian dollar. It did close a bullish candle on the 30-minute chart that bounced off of that trend line. That's a reasonable entry for me. I call that a throwback, a pullback, or a Winnipeg move, where it pulls back to a trend line that it's broken and then rides along that trend line. That looks pretty good to me. Stop loss down below 116.74 and a profit target at 1900. There's nothing wrong with that at all, in my opinion. All right, we need to look at another currency pair. I feel the need to look at that. Let's look at the pound dollar. I sold the pound dollar the other day and sent a signal out to sell it right here when it broke, right here on the program. For those of you, can you see my pound dollar 15-minute chart? And Kurt, can you point me to a link that you have, Kurt? I'd love to show that link inside the webinar that we're doing now and talk about sentiment. That would be brilliant. Here we go. Pound dollar 15-minute chart. I sold at a close below that trend line. That trade actually ended up closing out at break even because I moved my stop loss to break even after it got 30 pips. It rose up and retested that trend line. And folks, that was a reasonable place for a re-entry. This morning I talked about it in the Postcards signal service, and I'll talk about it again here. When it went back up and it retested that trend line that it broke, that's a Winnipeg move for me, or a throwback move for Martin Pring, or whatever else you want to call it. That was a reasonable place to re-enter. Did I? No, because I was asleep. But still the same, it's worth discussing. And that green baseline that I have is still a valid and completely reasonable profit target on the 60-minute chart. Oh, it's only for account holders. Well, did it come out today, Kurt? Did that table come out for account hold today? If it did, and you got an email, forward that email to rob@robbooker.com and forward that email to me, and we'll look at that email together as part of the webinar today, and I want to talk to people about it. Yeah, Kurt, I built a sentiment indicator at Interbank FX when I worked there, so I'm totally familiar with what it means, and I want to talk a little bit about the dangers of siding against and only with retail traders. I want to talk a lot about that if we have a few more minutes near the end of the webinar this morning. EBJ says, and all these points bring up the crucial and essential ideas of knowing the strength of your individual style, how you emphasize nothing is right or wrong in your view, but that you simply know yourself well enough that you're aware of what works for your comfort level and effective. That's exactly right. So that's the pound dollar, folks. I don't have any extra positions or anything to say about that. Pound yen is still my trade of the day, so to speak. This is what I'm most interested in. If we can get to 148 even, then the whole thing's going to be at break even for me. And we'll see if Kurt, did you forward that email to me? If you did, that would be spectacular, and we can spend a few minutes talking about it a little bit later in the program. New Zealand dollar, US dollar. I drew this 5-minute trend line just for you folks in preparation for a recorded webinar where my computer wasn't going to crash, which it did. And it broke below this 5-minute trend line that I've got going on. It's broken below that. That's a sell trade. This is a short-term type of situation. Stop loss above 58.57. I'm going to color that red because red is the color of a stop loss. Let me make sure that this is visible. All right, what's a profit target on this? What's a reasonable place to target on this? Harley says, how much information can you really use to trade? Where is the time, especially if you're trading intraday, to look at all the reports and stuff? What a great point, Harley. Stop loss above this recent high at 58.70. I just look at support and resistance, especially in the short term. I mean, in the short term, do I really have time to look at all this other stuff? Is there really time to plan out all this other stuff? No, there isn't. And you're absolutely right. A couple different profit targets that I could see that are perfectly reasonable on a short trade on the New Zealand dollar, US dollar. Baseline, always colored green. On the 30-minute chart, we'll go down to the 15-minute chart and get a better look at it. I think it's reasonable to draw it on the 15-minute chart. Profit target at about 57.63. That would be totally reasonable. New Zealand dollar, US dollar, target 5,700. Martin says that's a reasonable target. Let's look at and Martin's a friend of mine and a good trader and understands exactly what kinds of things I look at. Looking at some previous lows and a consolidation supply resistance area right down there from back on the 1st of May. That would be totally reasonable, folks, as a profit target. We could move to break even on a move to 57.70, and we could go down to 5,700, and there may even be another profit target or previous low at 56.30. Wonderful. All right, let's look back at the pound yen. You're looking at that right now, folks. You can definitely see that. I'm going to bring up my browser window, and I'm going to log into my email account, and I'm going to take a look at what Kurt sent over. It'll just take me a minute, so entertain yourself by doing whatever it is you do to entertain yourself. Folks, I'm going to share my email application, and here you go. It's going to take me a minute. Rob, for the pound dollar, did it mean that you re-entered so you had 2 lots but aiming for the target of the green line? Theoretically, yes, Abel, but actually, I didn't do that because I was asleep when it went back up to that level, so I didn't do that. I would have, yes. Okay, I'm going to turn that off and then reshare something different. All right, you should be able to see my email here. Are you able to see this? Okay, great. These are bitmap images of the FXCM SSI report. I do think it's useful. I do think it's absolutely fascinating. And I built something similar to this when I was at Interbank FX, and I want to speak briefly about the dangers and the successes of using sentiment as an indicator. What you'll notice here on the upper left-hand portion, can you see the image that I'm showing on my screen right now? I just want to make sure that you're able to see it. Okay, great. Harley, I'll answer your question. Be happy to do that in a moment. Euro dollar, you can see here that negative 1.14 means that more positions are weighted short on the euro than are weighted long. Dollar CAD, you can see that more traders are leveraged long than are leveraged short. Dollar Swiss, you can see that more traders are long. Dollar yen, more traders are long. Australian dollar, more traders are short. What this shows overall, folks, is a general sentiment that's pro-dollar by retail traders. And that there's and here's what I want to talk about for a minute. When I was at Interbank FX, I was pretty certain that we could build a trading methodology. I was at Interbank FX from September of 2008 to December of 2008, and I was the chief market strategist for them. I didn't want to work for somebody else, so I went back to doing my own thing, and I resigned in December. Good people, and I don't have a whole lot of regrets about the time that I spent there. However, I thought that you could build a system off of just trading against retail traders. And what I noticed was, and this is really important, Kurt, and I want to mention this, in all of the testing that I did and experimentation that I did, what I found was retail traders generally picked direction correct, but didn't have the account size to withstand it. Also, there were periods of time during the year, especially in trending markets, where retail traders started bucking the trend and getting super leveraged on bucking the trend. Short euro dollar right now, long dollar CAD right now. And what happened was there would be times when retail traders actually were picking the turns in the market and they got the direction right. They just didn't have the account size to withstand the drawdowns associated with being in there. In fact, when I did the research at Interbank FX, what I found, guys and gals, was that on the euro dollar, for example, or on the dollar CAD, for example, people had profit targets that were brilliant, profit targets that were absolutely eventually hit, but they margin called because they leveraged too much of their account. They actually retail traders were actually really good traders, with exceptions in certain parts of the world and certain account sizes, which we'll talk about in a minute. But that they actually picked perfect profit targets. They were brilliant about profit targets, but they never had the margin available to get there. They took too many big trades too soon, and they couldn't withstand a 200-pip drawdown. I hope that makes sense to all of you that are listening. However, there were certain parts of the world, the Middle East, and an account that had more than $50,000 in it, in the Middle East, generally you could almost do exactly the opposite of what that trader was doing and you'd be profitable. Generally speaking, if traders were long in the US on the euro dollar, they were generally short on the same currency pairs in Asia. There was almost a mirror image. And by combining all of that sentiment together, I think you didn't get a complete, and you still don't in these pictures right here, you don't get a complete picture of what's really going on. That US traders are actually overbalanced in one direction, and oftentimes Asian traders would actually be overbalanced in exactly the opposite direction. And it was a fascinating phenomenon to not just look at it as a whole and lump all retail traders in as either stupid or smart. I don't think actually in the longer term that's a reasonable way to look at this. I don't think that's the way to do it. I don't think that they're all made correctly. I spent hours and days looking at a profile of certain types of traders that were retail traders who historically did better than others. And I found a lot more out about it that we don't really have time to get into today. What it turned out to be, folks, to sum it up, is that money management mattered more than sort of picking a direction. Most retail traders, I'll say it again, most retail traders were actually brilliant at picking profit targets and direction. They really were spot on. They never had the margin available to cope with it, though. They had a $5,000 account, and they were trading 3 standard lots. And the next thing you know, it went 100 pips against them, and they got a margin call, and that was it. Harley says, isn't sentiment really indicated by the actual positions themselves? Well, I think that's what we're looking at right here. Martin says, so money management is one key to being a successful retail trader. Yeah, exactly. Harley says, the chart tells you where the sentiment is, right? Yep, that's what's looking here. BBA says, according to the SSI, US dollar CAD is a very strong sell signal, right? No, I mean, if you want to just take it blindly and say that, well, retail traders are long dollar CAD, so I want to be short dollar CAD. But look at the managed funds that FXCM, for example, runs based on just trading that sentiment or whatever it is that they do inside those funds. Just betting against retail traders is not a safe strategy. It's not reasonable. Rob says, hi, Rob, can you talk about this new system you'll teach in Australia? I could talk about it in Australia, but let me give you an example. On the pound yen, for example, 1 minute chart, I'm a counter trend trader, and there are methodologies that I use, Rob, where I not only take the initial position, I not only take one position, but as the currency pair moves in my favor, I take additional positions. So instead of making sort of 100 pips on one trade short, I'm taking 100 pips, and then 90 pips, and then 80 pips, and then 70 pips, until maybe in the end I've got 500 or 600 pips on a trade. It takes 2 days to go over that methodology, and it's a comprehensive methodology. And for those of you that have been to a live seminar that are here today, feel free to share whether you think it's share whether you think that methodology is a sham or a scam or whether it works or not. Maud is letting me know that it's time to start wrapping up. And so certainly want to express my appreciation for you being patient with me as I have crashed my computer while we talked today. And that's generally a tombstone trade, but it's not necessarily a tombstone trade. Yes, it can be. Thanks, everybody, for being here. That's been a support and resistance and overall market update with a little smattering of sentiment thrown in for good measure. And we're short pound yen right now. I'm certainly short pound yen. I'm happy to be short pound yen. And I'm trying to get down to 148, where I'll move my stop loss to 148.80. And I'm trying in the end to get down to 145.55. Thanks for joining me today. Glad that I could be here. Have a good day, everyone.